Good afternoon, George Cavaligos for HFT Bonds. Well, the game plan worked last night. We got short on the bounce. All my offers overnight and most of the time even during the day are going to be market if touched orders since I'm looking for levels to get tested. I was looking at 14 plus last night as a flat corrective pattern. 16 plus would have been the C equals A objective, so I got smart this time. I learned my lesson. I put a small offer at 14 plus and a small offer at 16 plus MIT. I got filled on the 14 pluses, woke up this morning, they were trading 7 plus 8. I was working the bid at 6 plus overnight. I probably should have just left that and walked away, but I ended up covering when I got in this morning at 9 and sat here the rest of the day trying to figure out what the market wanted to do. I had a game plan for the FOMC meeting, and I think that game plan might have gotten trumped by the supply issues eventually, but we had the 10-year auction. It went okay. I just think that guys were very long, somewhat hedged. I don't think they're very hedged on the 30-year either. So what we saw in the Fed meeting announcement was, the market rallied, fell short of meeting some of the objectives that I'd highlighted, and then immediately turned and went south and made new lows. I got close to a buy at that 148.11 area. It hit there, it bounced, broke right through it, went right down to 06, bounced back up to 11 again, looked like it was going to try and stabilize, broke again, went back down and closed on the lows at below the 148 even handle. So that wiped away any of my potential buys and or sells on the Fed number. And after that, I had to wait. I'm a technician. When you get those big, whipsaw candles like that, it messes up everything. And it takes a while before the market will kind of get back into its, normal trading mode in my world. Finally starting to see a little bit of a pattern developing. We did close on the lows. We made minor new lows right on the right after actually the pit closes. And I think we can try and bounce overnight. I really am liking the overnight trade more and more. There's no algos, there's no dealers, it's just people. And the market has, a little bit more back and forth, a little more wiggle. And it's giving you better setups overnight, at least in terms of the Elliott wave stuff that I'm doing. I'm looking at it right now, trying to figure out where my C equals A targets are. I'm thinking initially if we can do a flat corrective pattern, that'll take the 10-year up towards 133.07, 07 plus 09 plus. Bonds up to what, 148.07, 11 maybe, somewhere in that area. So scale into some small shorts up there. Probably covered tomorrow morning. Tomorrow's going to be a tricky day. First thing we have is the Fed buyback. They're buying notes tomorrow morning at 9:15. Then at noon we have the 30-year auction, which is, got guys very nervous here. The bond dealers have to buy this thing. They don't know how it's going to go. The market's obviously very weak. They are not hedged enough, I don't think, for this auction. So I think we'll see some further selling. Like this morning, we came in 2 a.m. The hedge funds came in selling it. They're very long. The dealers came in selling it here as soon as the pits open up in Chicago. So I think we'll look for a bit of a replay of that. I figure to be out of it pretty early though, probably right after the pit open or even earlier if we're hitting some levels that I'm looking for. I'll mention those in a little bit. On the way down tomorrow, early, you want to be covering into the, before the first buyback. Probably we'll get a bounce on the buyback again. And then if you want, you could probably sell that because you'll get another dip into the bond auction. And then after that, you got another Fed sale in the afternoon, right after the bond auction, 7 to 8 billion of short-dated notes. It's tricky. You're, buy, sell, buy, sell, buy, sell, and you're trying to walk between the Fed and the Treasury. That's a tough course to track. So we'll see. Maybe I get another day where I get the short on tonight, cover tomorrow morning, close the door, have a great day. Don't blow it the rest of the day. Some of you guys want to be more active than that. I'm throwing up support resistance levels in the chat room all day long, looking for setups, C equals A's, fib extensions, There's a lot of different stuff going on. On the bonds, we're looking at some important trend lines now down below the market here. I've got one at 147.15, another one at 147 even. On the 10-year, you've got the old lows at 132.25. I think we're going to go and look at, or get close to, or take out some of those levels and take a look at them and see what happens there. I think it's going to be an important day. Typically, lately, we have seen a tendency for the bond auction to mark a short-term low in the market. I'm a bit concerned. I think it'll bounce out of there, through Friday and Monday of next week. And then Tuesday we've got the 2-year. Wednesday we've got the 5-year. Thursday we have the 7-year. Usually these auctions are not that big of a problem, but you gotta realize it's year end. A lot of the customers have shut their books down. They're not playing, new purchases going into these auctions. So the dealers, I think, are ending up with more than they wanted, and they're hedging like crazy in the futures markets to protect themselves. So, and then now we got to sit around and look at what's going to happen next year when the Fed's going to come out and start with their new buying purchases in January. I thought it was very interesting that Chairman Bernanke said, they don't have a good idea of how this is going to work, and they're going to be flexible. They're going to increase or decrease their amount of purchases depending on what the economy is doing. So I think they're going to increase volatility. I think next year, if you've been a volatility seller in the treasuries, I think maybe we might want to be volatility buyers next year. We'll have to keep an eye on how this pans out. How is the market going to react to numbers? Are we going to look at strong economic numbers and go, oh no more QE, and that's negative for equities? Or are we going to look at, positive economic numbers? And I want to see how that works. It's going to be very interesting to see how the market responds to good and bad economic data in the new year, because the Fed's going to be watching that stuff. I think the non-farm payroll numbers are going to be a lot more volatile now. We're going to see some tremendous swings, similar to what we saw today. What did we do? Up to 150.12 and down to 148 even? Whew. I think we're going to see a lot more days like that. I'm not going to like that. That's not my cup of tea, but I'm going to have to learn to become a bit more flexible maybe and become a little bit more active. I don't know. We'll see. Let's hope we can make some more money the rest of this year and build up the account so we have a little bit more of a